Hi, I'm Whack.
Hey, and I'm Pat. Thanks for joining us for another episode of the Weekly Orbit. This week is the week ending Friday, September 6th. And it's been a kind of a shorter week because last week we recorded, I think, on Friday or Saturday. Today we're doing on a normal Thursday. But we were just talking off air about your newest Launchpad episode that you had on. Do you want to? I'm giving you a chance to plug it. And the question is, are you going to be canceled
Yeah,
because of
so
it?
the latest Launchpad episode is with a developer from Lido. So it was very much like, ooh, like, enemies, whatever. Like, but in reality,
Yeah.
is like they're regular people working at Lido, just like they are at Rocket Pool. And I had Dmitry Gusakov on that you might have seen in the Rocket Pool Discord. He pops in
Mhm.
once in a while, and sometimes he gets some shit, and sometimes he has a constructive conversation, and it works out. It was actually a really nice chat. Like, we talked about him and like him like being a math nerd and getting a PhD in math, and then getting a job in Lido before he even knew what crypto was, pretty much. So he just went straight to Lido, and then only later did he find out, the controversies around it and some of the criticisms. But his job is to get Ethereum to be more decentralized and more people on on staking, and that's why he's the one who designed the community staking module, the one that
Mhm.
really lit a fire under our collective asses last year,
Yep.
and really did push Rocket Pool to, I think, be better and stronger a lot faster than it potentially would have.
Oh,
There
for
was some
sure.
there was some really good areas of conversation. I think people will like it, and I really enjoyed the chat with him. I think he was a really cool guy.
And where can where can they find the rocket launch?
So
Or launch pad, sorry.
yeah, so it'll be the pinned tweet to my Twitter if you want to go there. It's the pinned tweet, but if you don't go there, then you can just see it on my YouTube channel. It's the latest video. But actually, by the time you watch this, there'll be a new rocket fuel that'll be more recent than that. So it'll be the second news video or the third news video, depending when you upload the video or when they release this. But it's one of the more recent videos. But it'll be also be my pinned tweet.
Okay, sounds good. So check it out. I will be, the next day or two. Last week we didn't go over markets. I had a jam-packed episode, so this week we're going to touch on. Let's look at the price of Ethereum. Right now we're at 2,406. For the week, we are down almost 7% on the week. It's been a tough September for crypto in general. Pool RPL token is also down significantly, and last week down almost 17%. Yikes. Down to $10.32. The ratio is at 0.0042. I remember we were over 0.005 there for maybe a week or two ago. So we're
Yeah.
down a little bit on that. And do you have any comments in general about the markets this last week or two?
Yeah, I think, alts are bleeding, ETH is bleeding, everything's kind of bleeding, and RPL is bleeding more than ETH. So it's kind of a tough situation. We're hoping that there's some kind of bottom in sight, with the rate cuts that are coming in 2 weeks' time. But people have different ideas of when the bottom might be in line with that, and what we might need to see for it to be a bottom. Like some people think that if there's a 0.5% cut instead of a quarter of a percent cut, it might be that it stimulates the markets a bit more, which means people will be quicker to go on to risk on assets like ETH and then RPL. It's all speculation. Like, I'm waiting to see if there's any kind of capitulation wick. With crypto just like dumps 20-30% in a day. I think I've got some money ready for buying at that price. And I'm just watching the markets to see if that happens. Like, the sentiment is really, really low. I'm starting to hear about people like dumping their bags, people selling all their crypto, being like, this is a scam market, I want to get out of it. There's nothing happening in crypto, like it's not worth being in here anymore. Last time we had DeFi and NFTs that were pumping everything. This time there's nothing new. And, that's all fine, but that is very much like, peak bear market sentiment. And my time in crypto, I've noticed that when people feel like that, that's a really good time to buy. So that's what I'm waiting for, and I think we're starting to see the very beginnings of that. But it might be another few weeks, might even be another month, 2 months, maybe even 3 months before that maximum intensity of people just giving up happens, and then I will purchase crypto
Yeah, is there,
again. But
in your
yeah, that's what I'm looking
experience,
for. Yeah.
you've been through some cycles. So What is this? Does this time that we're going through right now remind you of any time in the past in your investing history in crypto?
Yeah, so I think it reminds me of 2019, really, where we had the blow off tops at the end of 2017, beginning of 2018, and then crypto was just down for 2 years, pretty much. And then when COVID hit, just before COVID hit, we were kind of bouncing back. I think that fall, going into that December of 2019, was where crypto markets were doing really badly, and then there was a slow kind of rally upwards before the COVID crash in March of 2020. But we came out of that quite quickly because, in the market, in the TradFi, in macro sphere, there was a lot of money printing going on. The government was making assurances that everyone would be okay in terms of, money. And there was a lot of financial stimulus taking place. So that coupled with then emergence of DeFi summer, that really showed like there was a huge push. But really, this really does feel like that December 2019 period where everyone just thought, everything is going to hell, like it's all finished, it's all done. ETH, the ratio against BTC was down to 0.0016. Right now it's 0.016, sorry, and now it's 0.042, so somewhere around there. So it's 3 times better than it was last time, right? But the sentiment is pretty much the same. Like I think there's an overcorrection, or like it's gone too far. Basically, the negative sentiment has gone too far compared to where the markets are, and I'm honestly I'm still of the expectation that in the next 12 months, crypto is going to be a lot higher than where we are right now, and that's what I'm aiming to get myself positioned for. So, yeah.
Right. Yeah, I mean the macro bros talking about several rate cuts coming, over the next 12 months.
Yeah.
If rates go from 5% down to 4%, down to 3%, say, you got all this money that's been sitting on the sidelines and money market accounts that's going to go maybe a little more risk on, and and it just they're not going to park. There's a reason they lower interest rates is increase people investing and spending money and taking out loans and become more risky. And so I mean it's. Now, whether right now, I don't think the market's really pricing that in yet, which is strange. Maybe they think there's, yeah. So we'll have to see, but the writing's on the wall. We'll see if it all happens as expected.
One other thing that's developing, a narrative that's developing in the wider crypto market is the US election. And what's really funny is, I don't want to get too political, so I'm not going to talk about it too much, but Donald Trump is kind of positioning himself as the crypto candidate and champion of DeFi and blah, 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 whatever random stuff. But what happened is, when it looked like he was going to win the election, it looked like crypto was moving up with that idea. And then when Kamala Harris entered the race and she gained a lot of momentum in those early weeks, crypto actually, went down with Donald Trump's chances of winning. But now it looks like his chances of winning are improving again, but crypto hasn't moved up with that again. So it's like, what's going on? We go up, that's fine. Then we go down more, but we don't go back up. So it's kind of disappointing in that sense. So it's at least move up. But
sure.
Yeah, I'm just waiting to see what happens in the next couple of months, and if prices go down, I'll buy, and if they don't, then I'm happy with the bag that I have, and I'm ready to ride it out. So either way, I think it'll be okay.
Okay. This is an interesting stat that EverStake posted on their Twitter. 28.26% of all ETH has been staked, and we got over 1 million validators that are currently validating the network. And so I'm wondering, the reason I brought this up was there's what's the equilibrium that we're going to hit, you think? Because right now I think we're right around 3% is your rate of return if you're a solo. Perhaps it's even less. I don't keep up with the exact rates.
I do.
Where do you think we're gonna end up in? Because the more that's staked, the lower the rate you're gonna return, right? So if you had 28, we're at 28% staked, and you're getting 3%. Well, if we're at 35 or 40%, that rate's gonna be lower, and then people are like, well, if I'm only getting 1.5% on my stake, is it worth doing? Should I take my ETH and do something else with it? And so where do you think we'll end up here in terms of the percent of ETH staked?
Right. So that has actually been an issue of discussion for quite a long time about where we're going to go. So one of the things that happened is, the month of August finished with all-time high ETH staked, and it hit 34 million ETH. So that was like a little milestone that we got there. Now, because of this 34 million ETH, that's over 1 million validators, nearly 1,100,000, and the rate of return on the consensus layer right now is 3.02%. So it might be a little bit lower than that by now, but when I checked a couple of days ago, it was right at that 3% mark. Now, what was happening a couple of years ago was, or even a year ago, we were getting, decent MEV coming into the blockchain. Like, there was activity on Ethereum, and because of that, that was giving you an extra percent, maybe even 2% rewards. So that 3% was becoming, 4% or 5%, and that was quite nice, basically. The problem is that activity on Ethereum mainnet is really low right now, like we talked about a couple of weeks ago with the smoothing pool. There's hardly any ETH in there, and what we find is that staking is just like 3%. So there are definitely other things you can do to get better rewards for your staking, like providing your ETH in DeFi, putting it in Aave, putting it in liquidity pools. Like if you have ETH, ETH pool, like on PancakeSwap, on Balancer, you could be getting 10% plus rewards on that, which are pretty fantastic compared to just staking. So the thing is that staking is seen as like a risk-free kind of reward, and that is what people, still attracts people to staking. So as long as there's any reward coming through, I think we'll still keep getting people coming online, and especially with like LSTs that make it so easy that you can get, you can just swap your ETH for RETH, for example. You'll get, a nice reward, and it's just, you can use RETH in DeFi, you can use RETH as collateral, you can use RETH, to swap it into USDC or whatever else you want really easily. So it makes sense to just hold an LST, even if the percent goes down to like 1%, basically. Of course, with LRTs, they have a little bit added risk. You can throw them, they work with EigenLayer or whatever, they might give you a little bit more yield. So there's that element as well. So I think the stake amount keeps going up until there's enough momentum on, the ETH research side. And they've kind of flirted with the idea of changing the issuance curve, because they're kind of envisaging a world where 80 or 90% of all ETH is staked. And instead of ETH being the money of Ethereum, it becomes LSTs that are money of Ethereum. And I don't think, the core devs want STETH to be the money of Ethereum, or wrapped STETH to be the money of Ethereum. That's what they're kind of scared of. The thing is, like, I think if it's, in a sense, it's good for Rocket Pool that this is happening, because it means that there'll be continued demand for RETH potentially as RETH becomes a better product, and it becomes like we have the capacity to lift more RETH with all these changes that are happening with Rocket Pool. It should mean that there'll be continued demand for RETH coming, and that's something that I'm going to be paying attention to. But the number right now is still going up. I can see it going up to 50 million ETH staked within the next 12 to 18 months. Hopefully a good chunk of that will be coming to Rocket Pool, but let's see how it goes.
So see, 50 million would be 50, what, 40%?
45%, something like that, yeah.
Wow.
Because the 120 million ETH, yeah.
Correct.
Yeah.
Well, we'll see. Let's move on. Speaking of RETH, Liquity came out with their version 2, and it features RETH. So you could now, why don't you explain, because I know you've been a big fan of Liquity. They produce a stablecoin, a decentralized stablecoin. Rocket Pool pays out some grants in LUSD as proof that we picked the best stablecoin out there, right?
Yeah. So
why don't you shill for Liquity here, and what is this new V2? How does it benefit RETH?
Yeah, so I have not been ever paid by Liquity. I've got no investment in Liquity or their token or anything like that. The thing that I love about Liquity is that it is currently the only truly decentralized stablecoin out there. That's because Liquity V1, the only collateral they allow is ETH, and people deposit ETH in there and they use it to mint their Liquity token. It's very much like Gravita. If you experience Gravita, we talked about Gravita on Rocket Fuel a lot a couple of years ago when it was launching. But Gravita is like a Liquity fork, which means that you could deposit and then they accepted LSTs like RETH into Gravita. So what Liquity is doing now before I do that, actually, Liquity has a problem. So Liquity has fixed interest rates where you say that the interest rate is 1% or whatever on your stablecoin borrowing. The problem is that elsewhere you can get better rates on your stablecoins. So Liquity, Gravita, and these Liquity forks, the problem they had was they were bleeding out TVL to other products. So people would deposit their ETH or RETH, whatever, in like Liquity or Gravita. They would mint LUSD or GRI, and then what would happen is they would sell those stable coins and buy USDC, buy USDT, whatever, and then deposit those on Aave or other places where they could get better yield. So it kind of led to a negative experience really for these protocols. So Liquity version 2 now is fixing that by changing the interest that you can charge. So the users can define what interest they want to give their coins out at. And another thing that Liquity version 2 is doing that is expanding on day one from ETH only to RETH and wrapped STETH like Rocket Pools and Lido's LSTs. It's going to be immutable, which is fantastic. I think they're going to give themselves scope for adding other collateral types later, but the fact that it's launching with RETH on day one is wonderful. Now, I'm a fan of LUSD. I actually get paid in LUSD now from the GMC for my grant, so I'm a huge fan of LUSD. So Liquity version 2 will be launching in November. They're actually going to have a new stablecoin called BOLD, BOLD, and they're going to slowly transition from Liquity V1 to Liquity V2. So the fact that they're aligned with Rocket Pool, they've actually been Sam who put this tweet out. It has been coming into the Rocket Pool Discord for quite a while, and trying to figure out how we can make this happen, where RETH would be one of the collaterals for Liquity version 2, and I think they've done a really good job here, like listening to the Rocket Pool community and using RETH. And I think the GMC will try to co-incentivize some liquidity pools. Maybe I'm not sure of the full details of that. We're still a couple of months away from it, but it seems like they've got some good ideas. So great stuff, Liquity, and it's awesome that they're integrating Rocket Pool's RETH from day one.
Yeah, and you don't see too many immutable contracts being deployed, which means once they deploy it, it's done, and it's they must feel pretty confident too about it, because it's not upgradable. Meaning once it's out there, it is what it is.
So that's one of the things that makes Liquity V1 so good. It's like the most Ethereum aligned, stablecoin there is. It's like uncensorable, like there's no way to limit transactions, censor transactions. It's permissionless. Anyone can deposit their ETH into there, like me, you, and the person you dislike the most in the world, right? There's no way to stop anyone doing it. Those are the things that you really want. The problem is with these kind of stable coins is that they can only scale a certain amount. So by design, sadly, by their limitations, they'll always be smaller than we want them to be. But for what they do a wonderful job. So huge support for Liquity and what they're doing.
Yeah, I imagine the stablecoin market's going to kind of it's going to be split. You're going to have those stablecoins that are more centralized that meet regulatory, like MiCA in Europe, and potentially stablecoin legislation in the United States that are going to be centralized. And then I think you're going to have like a niche market of decentralized, like LUSD, for example, that won't be able to scale just because it can't meet those regulatory requirements, but will still have a marketplace fit.
It's not just the regulatory requirements. Regulatory requirements are definitely like an aspect here, because users now want yield on their stablecoins, and the way that centralized stablecoins are doing that is by sharing treasury yield with their users. Right. And that's what's happening now with, Maker's DAI. Maker are changing to Sky, and they actually are having their new stable coin to go with that is going to be censorable. So you can freeze it, and that was people really upset about this because DAI was actually, one of those stablecoins that had some of those values. Of course, they had other collateral types, which meant it was less, I want to say pure maybe than LUSD, but it was more scalable than LUSD because of that. So the trade-offs, they were taking, but now it seems like they've gone a little bit too far for some users, and the fact that they are making it so it's got those limitations, I think has turned people off. So maybe like you're right, like they'll never grow to those levels because sadly because of the collateral type required, it's just not efficient to grow, right? Like you would need ETH to be in the market cap of like $10 trillion to have $1 trillion worth of LUSD, which is what you might need, for it to make it the world's money, the world's like currency. And ETH is not there yet, and it might be a few years before we get there. But until then, until we can safely have a completely decentralized stablecoin that is, at $1 trillion market cap, for example, until then it just won't be big enough for the whole world. So
unless there's a day where T-bills are all tokenized on chain, and then you can use that as backing instead. You know what I'm saying?
They won't be decentralized, right? They'll always have those permission true. Lists and stuff. So it's still a completely different kind of asset, and that hopefully will happen. In that happening, hopefully ETH will gain value up to the point where it's trillions, and then something like Liquity can have a $100 billion or $10 billion, $500 billion or $1 trillion stablecoin. That would be amazing. So
that'd be awesome. Yeah. And if that happens, we should be able to buy our own islands with our ETH bags.
Yes, right. Absolutely, definitely.
Let's move on. So we were talking last week that we had a draft RPIP-62, and it is now moved to the next stage where it is on the forum, which is the next milestone. And Honolulu has, sorry if I butchered the name again, I can't say it.
Halululo.
What is it right? Halululo?
No. Halululo.
Halululo. Okay.
Yeah, there you go.
I feel like I'm in first grade.
Yeah.
Okay, so Honolulu.
No, you're doing it again. Yeah, there you go.
There you go.
Yeah.
It's posted the RPIP-62. I'm going to get that right one of these weeks.
Yep.
And kind of just breaks down what it's going to be. And the goal here is to get additional feedback and then eventually take a sentiment poll. The main ideas here, I'll just read it from the RPIP.
Yeah.
Remove the RPL requirement for new mini-pools. That's a biggie. Set mini-pool contract commission to 5%. That's from 14%. Commission of existing pools will be unaffected. And provide additional rewards on RPL stake to temporarily increase effective commission from 10%, which has no RPL, to 14%, which is RPL collateral above 10%. As part of the smoothing pool claim. And this temporary increase will end a few periods after Saturn 1 is released. So this is kind of a bridge until we get to Saturn 1. So you see here, there's a nice little chart. If you decide, I'm going to just post ETH and I'm not going to stake any RPL, I'm going to get 5% ETH commission. And then if I decide I'm going to put in some RPL, then I'll get more, essentially, is the bottom line. Cliff is a different topic, and that is, if we don't pay RPL rewards if you're below 10, this would, if we got rid of the cliff, we would then start paying out if you're below 10%. And there's pros and cons to doing this. Let's see, right now there is a little bit of a poll. And we've got 50 voters right now. 70% say remove the cliff, 30% say stick with it. And why don't we, when we start here with the first part, which is the ETH only mini pools, is that about right? So if you decide I'm not going to post any, I'm not interested in RPL, but I want to get additional ETH rewards more than if I just solo staked. So I'll get 5% commission.
10%.
pardon me, 10%. Oh, I see.
10%,
It's
yeah.
5%, but the additional 5 is made up with what, the smoothing pool?
Yeah, that's right. Yeah.
Okay.
So the ETH that's
Why don't
going
you,
into the
why don't
smoothing
you
pool.
take it from there?
Yeah. Okay. So, market pool, is stagnating. Like we realized this, and RPIP-49, which is the Saturn 1 and Saturn 2 upgrades, they made the case really well. Val, Samus, and other core contributors to that research, they made the case really well that Rocket Pool would need to get a kickstart to grow, and if we can grow, like the way that would happen is by having ETH only validators with no RPL requirement. Now, that's wonderful, except Saturn is 6 to 9 months away before we see on mainnet, and that's a long time. So Lido CSM, which will also require ETH only validators, is launching in 2 months potentially. So what does Rocket Pool do in the meantime, right? There could potentially be like a 7-month window where Lido CSM can gobble up node operators and Rocket Pool's just still waiting for Saturn. So the community had this idea of Saturn 0, which is, getting ETH only validators sooner, and trying to build our TVL up as much as possible going into Saturn 1, which is when we can use that TVL to direct revenue towards RPL and towards stakers as well. So that's kind of like the lay of the land. So this is what the decision has been, is that we will have ETH only validators, and this is the area of consensus amongst the people who have come up with the research, is have it as 10% for 0 RPL, and if you want more ETH rewards, then you've got to start adding more adding RPL, and the more RPL you add, the more ETH rewards you'll get, up to 14%, which is what legacy, like what current node operators get. So that area in terms of the research is not contentious. Most people say that this is good enough to go to a vote. Whether they'll vote in favor of it or not, we'll wait and see. But that idea is quite solid. Now, the idea that's not solid, and the one that there's still debate happening, and this is where we want people's opinions, is what happens to the people who have currently staked RPL. So the idea is, I'm Bob, right, for example, and I've got a validator, and it's at 5% commissions, 5% collateral, so I'm not getting any RPL rewards, but I'm getting ETH rewards, so that's fine. It's like I've given up on the RPL rewards for now until the ratio increases. It's totally okay. But now I've got more ETH, so I can't stake it at the moment. So what do I do? If the cliff is there, what Bob would have to do is set up a second node that is an ETH only node. So you'd have to manage 2 nodes. And this could happen trivially on the same machine. It's just when you do a software update for one node, you'd have to do a software update for the other node. It's a slight friction, basically. So to make it a seamless experience, what you'd say to Bob is like, look, don't worry about the 10% RPL collateral. We're going to remove that limiter, and you'll have rewards going all the way down to 0%. Like as long as you have some RPL, you'll get some RPL rewards. But what will happen is this will make it a lot easier for you to add more ETH to your stake. So that's an interesting idea. That makes sense. But the problem is that there's some second order effects here of what the benefits it provides, and some of the negatives it has as well. So if you have a look over here, it makes it's easier to add more stake. If you remove the cliff, it's simpler for users. They only have to manage 1 node instead of 2 nodes. It might make it easier, well, actually, it makes it easier to people who are still on 16 ETH to go down to 8 ETH validators. And the reason for that is because they don't have to worry about the RPL collateral anymore. They'll still get those RPL rewards. And the idea is that, people won't leave because they'll start getting RPL rewards again. So, there's this idea that some node operators have left because they've just gotten sick of not getting RPL rewards. So they would stay. So those are the positives for giving people rewards down to 0%. Then the counter opinion is you should keep the rewards at 10% because the people who have stayed over 10% and the people who topped up over the months, they're actually going to get their rewards diluted significantly. So it might be as much as 30% because there's so many node operators who are below 10% right now. They would start getting rewards that they currently don't get. And that as a percentage of rewards might end up being about 30% of the pie. So if you are getting 100 RPL per month right now, you would potentially go down to 70 RPL because of all these people who would start getting rewards that they weren't getting rewards before. Now, the idea is that these are...
if I can interrupt you, the counter is that those folks who've been over 10 have been getting oversized rewards for the last several months because so many people are below 10% that there's the pie... the pie, there's less people in the pie, and they've been getting outsized rewards. So this,
Yeah.
perhaps it evens out. I mean,
Yeah.
I'm just throwing that out there.
That makes sense. Yeah, that's a good point. So there's 11 million RPL staked, or somewhere thereabouts, or maybe 10 million, somewhere between 10 and 11 million, but only around 7 million of that is effective. So that means, the people who are effective have been getting the rewards of those people who are not effective, basically. So that is a
They've
really
been
good
eating
point.
their lunch, as they would say, right?
Yeah, exactly.
It's like, oh, thanks for that sandwich. I'll have another sandwich.
But the thing is, they've gotten used to having that lunch now, right? And they would say that, hey, we deserve that lunch because we're the ones who did top up, or we're the ones who did go in the high collateral percentages to begin with. So we are more Rocket Pool aligned. Now, I'm not saying which argument is better or worse, but that's kind of one of those ideas that comes from it. Another thing is, there might be, if we remove the cliff, there might be more sell pressure. And the reason for that is because the people who are below the cliff, they're the ones who potentially don't care about RPL as much as those who are above the cliff. Therefore, if they got rewards, they might actually sell them the rewards that they get. Also, there's some evidence to show that people who are on the cusp, there are some people who top up and try to get above the 10%, and they still care about their RPL rewards. Going forwards, that wouldn't be buy pressure anymore. So it's almost always the case that going into rewards night, you do see 5, 6, 7% increase in the RPL price because of those people who are trying to get their rewards, and that potentially could go away. So then the other factor is, there's as these people sell RPL, the price might go down, which might mean people get more upset with RPL, and then they want to leave Rocket Pool. So there's pros and cons on each side. And honestly, I'll be honest with you, I still haven't decided what my opinion is. I'm someone who's been thinking about this quite a lot, right? So now's the time for me to think through my thoughts and try to think which side I'm going to go towards. However, it might be the case that there's some other variables that we haven't paid attention to, and that is what you're going to move on to next. So why don't you introduce that, and then we can talk about it.
Yeah, in case you're wondering where the team is, Langers here said, I've already said I'm in favor of removing the cliff. There was some talk about the top-up buy pressure. Overall, I think it is a significant improvement in UX, so it is probably worth it. So that's from Langers, represents the team.
Yeah.
One impact is on, let's go down to Romana. So Romana's been working on RocketLend, and RocketLend was born before this idea of ETH-only Minipools really, came about. And the idea was, how can we easily let node operators get additional RPL without exposing themselves to RPL, really. They're just putting up their existing ETH that they have staked as collateral, and in return they would get RPL that they could stake and maybe, get over that 10% cliff. Well, with ETH only, that kind of makes RocketLend in a way
less attractive.
It's less attractive. It does, because folks won't use it as much because they'd be like, well, yeah, I don't have to be over 10%, so I'm just going to sit tight. Whereas before, if the cliff is there, there's more of an incentive to get additional RPL.
Yeah, it's not just that.
Anyways.
There's also the fact that, sorry to interrupt you, if they go in with ETH only validator, they're still getting 10% of that ETH reward, right? There's not a requirement anymore to have the RPL like there was before. There would have been before. So they would have gotten 0 rewards, but now they think 10% is good, and I don't want to add the added smart contract risk of having my withdrawal address be, RocketLend. So the 4% that I would get more isn't worth it, and I would just rather keep the ETH only validator. So it kind of cuts into how attractive RocketLend is basically, which is a shame because. No, actually, why don't you carry on and then we'll talk about that more. Sorry for interrupting.
So the GMC has funded audits for RocketLend. Romana and others have put hundreds of hours of work into it. So, I guess the choice is, well, if we go with ETH only, it kind of puts RocketLend in a position where we don't really need it. Some would say, well, this RocketLend was going to be kind of temporary anyway, because when Saturn comes, the whole RPL requirement is gone anyway. So this bridge, we found a better bridge, I guess someone would say. It's one of those things where I think you look at what's best for the protocol, and is it RocketLend or is it ETH only Minipools? it seems to me just if you're a node operator, you probably more likely than someone outside of Rocket Pool ecosystem to use RocketLend because you're kind of familiar with it's an additional layer of friction, but you're willing to do it because maybe you're familiar with Rocket Pool, you're familiar with Ramana. Whereas if you're outside looking in and you see, well, hey, I still got to get wait a minute, I want to stake my ETH and I still need RPL. But then I can use this thing called RocketLend to get my RPL. It just seems like layers of friction. Whereas the ETH only mini pool is more straight up. It's simple. Hey, you got ETH. You have 8 ETH. You can stake it here, and that's it. It's a little simpler to explain. The thing that sucks is that there's you got community members who've put so much time into RocketLend already. That's time invested, and now they kind of get, well, I guess the crypto word would be might get rugged in a way, right? Yeah. So what's your thoughts?
Yeah, it's a really tough situation. If you scroll down a little bit, Ramana gives a few different options of what could happen from here. He says one is push it to ways forward like here. He says we definitely need better coordination going forward, as in like we need the whole of the community working together and keeping all these things in mind, right? Like that, hey, there is such a thing as RocketLend. How do we incorporate this into this suggestion? So one is like, to abandon the grant, which Ramana gives more information about that. After that, tell the RocketLend team, hey, instead of working for getting RocketLend out now, tweak it so it works for Saturn. And there's some advantages for RocketLend in the Saturn world because, you'd get a lot more ETH yield than you would now. And then the third thing is slow down the timelines, let RocketLend get out there and see what impact it has. And then you can implement, RPIP-62 a couple of months down the line if RocketLend is not working. But if RocketLend is working, then just let RocketLend do what it does. So those are some of the ideas that Ramana has put forward. I sadly haven't had a chance to read any responses that have come through to that yet. I did read Ramana's post yesterday. I'm still thinking about it in all honesty. Like, I'm on the GMC. The GMC was, has kind of claimed RocketLend as a PDAO protocol in the way that we've set up funding for Ramana. Ramana got $7,000 as a way of saying thank you for the work. The GMC is paying for the audit. And then there's a whole pile of money that would go to Ramana in the case of RocketLend being successful. So it's very much, the GMC wants this to be a public good for Rocket Pool. And, you'll get a nice thank you from the GMC for making this happen. Whereas obviously if it doesn't happen, then a lot of that funding that was contingent on it being a success would go away. So I kind of understand Ramana's frustration. There are other people as well who do want to maintain the cliff. Like I said, it's a 70-30 split right now, with 50 votes. So most likely what will happen is that the two ideas will go to the snapshot vote. It most likely will be a ranked choice where you will say, I want ETH only and I want the cliff to be gone. I want ETH only and I want the cliff to stay. I don't want ETH only and I want the cliff to be gone, which kind of doesn't make sense. And also, I want nothing to change. I want there to be no ETH only and I do want the cliff to remain. So most likely, I think that's what we'll end up voting for. And then people can decide whether they want, the cliff or not. And it will be ranked choice. So, your first choice, if that doesn't win, then your second choice will count, then your third choice will count, example. There's still some things that we need to sort out as a community and kind of figure out where we're going. And that's the great thing about this period that we're in right now is like, you've got just under 2 weeks to share your ideas, share your opinions in a more formal way. On the forum, it's a bit more structured. It's a bit easier to follow the thread rather than Discord where, there's literally 6,000 messages in the ETH only thread and it's really difficult to stay on top of every day. But I think that this is, I personally think that this is RPIP-62 will pass, so we will get ETH only validators in one form or another. I just don't know what that's going to look like. So, and what impacts it has down the stack. Because at the moment, I'm not sure how NodeSet are thinking about this either. I think they'll be fine. From the last comments from Nick is that they could make it work, but I don't know if that thinking has changed or not, because we've not really heard from those guys recently. So there's a whole lot here that we need to get our heads around, and the community is working together to try to figure it all out. So it's pretty cool.
Yeah, my final thought on it is I think there still might be a room for RocketLend in a Saturn world, because if you remember, there won't be you'll have the choice of staking RPL or not. But if you do stake RPL, you get outsized rewards with voter share, or deciding whatever we decide. Yeah, whatever we decide to do. So there still is a incentive to have RPL staked, and if there's an incentive for that, there might be a market for, because folks will like, you know what, hey, I want to add X amount of RPL to my stake so I can get outsized rewards. But you know what, I don't actually have to buy any and expose myself to RPL. I can just use my ETH stake as collateral and get additional RPL. It's an easy win. So there's still might be a room for that down the road. So I hope it sticks around, but we'll see. That's further discussion.
Absolutely.
Let's move on to wins. Do you have a win this week quickly for us? Do you want me to go first?
Yeah, please.
Okay. So last week I was doing this commercial, and on the set there was this guy, Chris, who he's a copy editor, and he's got this new app. It's like a fitness app that it combines, like, there's a lot of fitness apps out there, but it combines like mental health with your physical health and yada yada. And the idea he's been researching is, how do you get people to start a new habit? All right, because that's the whole thing about exercise is, well, and so some people are like, okay, well, I'll go out for a 10-minute run, but if you haven't run in a long time, 10 minutes might be a lot. And then you feel like kind of on the next day you're hurting, you're sore, you don't want to do it, and then boom, it stops. So the research was, and this is the win, is if you want to create a new habit, start off super, super small. Even it seems like ridiculously small. So maybe go for a 1-minute run. All right. And then the next time you do a 2-minute run, and then so on. And over time, if you keep doing that, it becomes a habit. And so for me, next year, what I want to do is I want to learn, speak another language. And I was thinking about learning to play an instrument like piano or guitar. And I thought that it's been on my mind. How do I implement this into my daily routine? And I thought that was a win. It was like, well, we could start, studying a language for 1 minute a day, bump it up to 2 minutes, and so on. And then before you know it, you're doing it all the time. So that's my win, is time management and starting new habits. How about you?
Okay, before we carry on with that, I'm going to give you a little aside. I don't know if you saw this thing going around on crypto Twitter for the last couple of days, but there was some survey done about what the most attractive habits and hobbies are for that women find most attractive in men. And
Crypto was like zero, the worst, wasn't it?
Crypto was I think ranked like 5th from last, like at 20% or something. But 2 of the top 5 were learning a new language and like speak another language and musical instrument. So I'm like, have you been reading that part? Yeah. So
well, there you go.
So I'm like, what are you doing there, Pat? Like trying to.
I think learning to dance would be the third thing women would love, right? Every girl likes a guy who dances.
Crypto was really low on the ranking, so I'm glad that I'm married and like I've locked her down, because I don't know if that would happen now. But for me, the win was actually talking to Dimitri from Lido.
Okay.
I think that he was a little bit scared because he watched the Rocket Fuel episode when I was really angry about Lido, and he's seen me make statements about Lido that have been quite strong in the past, and I think he thought it was going to be like an attack dog basically. But I reassured him. I said, no, I'm a really friendly guy. I'm quite nice. Like, I'm personable and pleasant to talk to. And I think he was still kind of suspicious, but he agreed to the interview, and it actually ended up being a really pleasant conversation. And in some ways, like, just talking it out with him helped us see that there are some, which might be difficult to imagine, but there are actually some similarities with Rocket Pool and Lido. And in that, Lido started off super centralized and now is trying to get more decentralized. And with Rocket Pool, we've, of course, been max decentralization from the beginning. However, there's some criticisms, made of Rocket Pool with the Saturn roadmap that, this might be a centralizing force. But because of that, Rocket Pool has such a huge capacity to grow. And are we trading off some decentralization for growth? And we just kind of made this realization that, we're kind of in some ways converging with our models and how we are attracting stake. So it was a really nice conversation. And I really enjoyed talking to Dimi, and I'm sure that, the listeners will enjoy that as well. So that was my win for the week.
Yeah, so tune into that launchpad on WAC's YouTube channel. And that concludes today's show. Thanks for listening and watching. Make sure you like and subscribe. We'll see you next week for another episode. And WAC, we'll see you soon as well.
Yeah, I just want to add one thing. I was saying earlier that I will be buying crypto if certain things happen. That is, of course, not financial advice for any of the listeners. Like, I'm not telling you that you should be buying anything. Like, you make your own decisions. Don't copy me. I was just letting you know what I was thinking at this moment in time.
Right.
Yeah, it's all up to you guys too.
Yeah, none of this is financial advice.
No.
We don't have licenses to be giving people that. So this is just opinion.
Yeah.
Don't
take it
and
fun.
Take it to the bank. You could lose it all.
Please don't. Yes.
Yeah. So, all right. We'll see you guys next week.
Bye.
Bye-bye.